Hello, hello. How's everybody doing? Still in a really shitty mood, but a little bored. So I thought I'd pop on here, give a quick update. It's always better on the up days, though I'm still down 25% year to date. I'm gonna need some big catalysts to happen, mostly really just with forward, to claw back any of that, given my current position sizing. And I'm gonna go through all my positions with you right now. Starting obviously with forward, which is a 50% position. It's a 40% common and 10% delta adjusted. All the options are in January 2027 and December 2027. Obviously, nothing has changed in forward since the last time I did a YouTube video. The trucking stocks are on fire. We still have no news from the strategic process. And there's really not much else to say. The only thing that I will mention is that as the rest of the sector explodes higher, given forward's leverage, said it a million times, the equity should be going much higher than the comps, assuming that the LTL side of the business is not terminally impaired, which I don't think it is. So I'm not going to go back into the whole deal with forward. You could do your own math. You could figure it all out. Either LTL is impaired or it's not. And if it's not impaired, then it's at least a 10 times EBITDA business. And if it's at least a 10 times EBITDA business, then you get to a stock price that's probably triple what you're trading at right now. And that's even without much of a recovery in the overall business on either the Omni side or the Forward Air side, or on the Expedited side. So that's Forward Air. On TripAdvisor, that is like a 15 or 18% delta adjusted position. I guess I should pull up this here. And there's no update there. The story is very well understood at this point, right? I think that if you get a sale in the fork, that will help highlight the sum of the parts. It was recently upgraded by a Bank of America, I think, and they came to a 20s stock price target in the 20s if you do a pretty conservative sum of the parts with the three parts. This is obviously was my whole thesis. It's anybody's thesis that owns it. So it should be no surprise that I still agree with that, and I think that's the catalyst. It won't be obviously JANA winning board seats because JANA has negotiated its board seats with TripAdvisor, and they're not going to have control, but they'll have 4 of, I think, 9 seats come the meeting. And Maisie! And we sit and wait with TripAdvisor for news on the fork, or potentially whole company sale, but most likely just news on the fork. ABVX, nothing to update there. Big position. You guys know the whole situation there. That's a legacy position. I do have a new position that's not terribly liquid. It's a big company, but it's controlled. So it's another one of my famous failures with these squeeze outs. It's DSGR, Dog, Sam, George, Roger. And this one checks pretty much all the boxes with me when it comes to squeeze outs. The majority owner is also the CEO. It's a private equity firm. They own 79% of the company. It's like a roll-up. It's an industrial roll-up, and it's underperformed expectations over the last few years. They can't get the growth in the margins that they expected to get. It's not traditionally cheap. The price that they're offering to buy it at, I think, is like 10.5 times EBITDA, but comps trade like 15 to 20 times EBITDA. It's one of those kind of businesses. And they missed the quarter a few weeks ago, and the stock went from like 30 to 20 on the messy quarter, I would say, and kind of muted guidance. And then the private equity firm put out a 13D about a week later, offering $29.50, which is a big premium for the unaffected, which was like 19 or something. And they said they can get it all done by May 6th, I think. It's been about a month since the original 13D. The stock traded in the 25s on the letter. So people were either skeptical that they were going to reach an agreement with the special committee, or they were skeptical that there might not be an activist that comes out and votes no, since the float is so small. You could have a blocking position if you acquired 5% of the company or 6% of the company. Since there's only 21% that's remaining outside of the 79% that they own. That's good math right there. I thought that the spread was way too high. I put it on the first day that it came out, and I haven't done too much with it since. I did buy a little more today. The other thing I liked about it a lot was that the bid came after the Iran war started and after the market was already going down a lot. So it wasn't kind of a legacy bid before the macro stuff hit. They very well knew about it when they bid. So, your two main risks are obvious, the same as always. One, that they walk because they don't like what's happening with macro. I think that's very unlikely given that they own 79% already, and that this is not like a Target Hospitality thing where that lost the contract, the main contract. There's no situation here where there's some sort of material thing that can happen in the business over the next 2 months that would change the value of the business outside maybe of the stock market going down 20 or 30%. So your real risk would be that the special committee can't agree on a price with them. And I think that risk is pretty low given the stock has traded materially below the $29.50 since the bid was announced. What do I think it goes for? You could make an argument that they'll have to bump it. They always have to bump it. If they bump it 5 to 10%, that's a pretty good IRR from here at $27.50. Let's say it ends up being $30.50. That's over a 10% gross return. I think it should be announced in the next 8 weeks, and then you, of course, still have 3 or 4 months to close. But these things trade really tight because there's a lot of post-close lawsuits that happen with any kind of squeeze out, especially because they just missed a quarter and now they're trying to acquire it. And the CEO is the private equity firm, so it's all interrelated. It's not like Target where the 70% holder was just on the board. They run this company. Anyway, so far it traded $2.5 million today. So when I say it's a liquid, I'm not saying it's like a penny stock, just that it's thin. So I don't think there's any rush here. I almost certainly won't be announced before May. These things take time. But I did like that they had in the initial 13D a specific date they thought they can get it all done by. It's pretty rare to see that. You sometimes see some sort of guidance, but you don't usually see a specific date. PRTA, I still have that whole position on, it's a big position. It's like 15%. And I go long term on that next month, and I'll see what I do there once that goes long term. PTGX, that thing is an absolute beast. No plans on touching that. I put on a position in another liquid name, a Canadian food company called MTY, ticker MTY, Mother Tom Yellow. It's an owner of multiple different franchise brands in Canada. They have in the US as well. They're running a strategic process that leaked in November, and they confirmed it on their conference call. They report earnings, I believe, on Friday. It's a very cheap stock. It's an over 10% free cash flow yield and like 6.5 times EBITDA. You have an older person who's a chairman of the company that owns I think 12% of the company. I think he's in his 70s. I think it's unlikely that process ends without something being done. I don't know whether that's a selling of one or multiple of the brands or the whole company, but we should be nearing an end of that process soon. And that's like a 10% position, maybe a little bit smaller, an 8% position. And that's about it. I still own a sizable position in Domo, though I sold a lot of that over the previous month, luckily, with everything else going straight down. That as a common position is like 4.5%, and then delta adjusted it's like a 7% position. The problem with Domo is the same problem with all these software names. I spent some time on Yext the last few days, and Yext, even at 373, it's hard to be super interested in it. I'll walk you through the math. I mean, there's 100 million shares outstanding. There's maybe 100 million in net debt. So you're at like a kind of a 375 million market cap, a 475 million EV. At first blush, you see 120 million in EBITDA. You think that is a cheap stock. And if they can start growing it, I mean, it's really cheap. And the CEO wanted to own it at $10. And would have probably had a 20% IRR embedded at $10, and he didn't get away with it. So why do I think it might not be cheap? Well, last year they did 50 million or so in free cash flow, and the previous year they did close to 50 million in free cash flow, and stock-based comp was 50 million in each of those years. So they did zero in actual free cash flow. So you could say, hey, that stock-based comp isn't right because the stock was much higher, but it's not really true. I mean, last quarter they did 11 million in stock-based comp, or I think it was 10.3 million or something. So, if you run rated, it's, 40 million, 42 million. And I don't fully buy the argument that they can remove much of that stock-based comp. Let's say they remove half of it and they go to 25 million. That's 25 million of free cash flow on a $500 million enterprise value when you have this whole AI existential threat in the entire software industry. It's just hardly very compelling to me, especially after they ran a strategic process. What's funny is I did buy back a little bit of it the last few days after I went through 31 days with my tax wash, and because I basically sold 95% of it and I got all the tax losses. And it's like a 4% position now, but I don't even know if that's, or 3%, 3.5% position. I don't even know if that makes sense, quite frankly. But I bought a little bit more. The other software names, PD and RPD, they're just like 1.25% positions each. I continue to think there's an opportunity in software. The problem is they're really high quality names that are defensible against AI. They haven't gotten down as much as the other ones. They're down 30% or 25% versus being down 50 or 75 or 80%. Somebody I know, good friends with on Twitter, gave me the ticker. I think it's CCCC, and it's a former SPAC. And I think I have one too many C's there. Let's see. Yeah, CCC, not 4 C's, but 3 C's. And I mean, yeah, it looks like a good business, except it doesn't look cheap at all. You can go through the numbers, I mean, it's still, by objective means, an expensive business with a ton of stock-based comp, crazy amounts of grants. So, I don't know. I still feel like there's real opportunity in software. I just don't know exactly where to dig in or where to be exposed to. Domo is the only one that has a public process outstanding. And, you have to believe that at this point that the CEO is a seller. I just don't know what price he gets and who the buyer is. Not necessarily a great combo. It's so cheap, it's like 0.5 times or 0.7 times sales, whatever it is. It's ridiculous. I think that's about it. The overall stock market, I shorted futures yesterday in the after hours. And I'm now delta adjusted neutral. I'm very short futures. I've been wrong since the after hours. I think I put them on when the S&P was 1% lower than where it is right now. And as we're talking, the market's almost hitting new highs right now during the day. I have no idea what happens in the next 2 weeks. All I know is that there's one of two things either has to happen. Either the deal breaks with Iran, or both sides just lie about what they've accomplished, because Iran's not going to agree to not enriching uranium, and the U.S. is not going to say that they let Iran enrich uranium. All the other stuff can probably be figured out. Trump doesn't care if they charge a toll for boats to go through the strait. The key thing is the uranium. And then, of course, you have Israel with Lebanon and all this other stuff that could happen. So, we're just a few percent away from all-time highs. I don't know how long I'll stay hedged, but right now it always feels good to have the hedge on, though I hate being mismatched sometimes with my portfolio and being short futures. Today I'm not. My top 4 positions are all up 2 to 5%, forward, trip, ABVX, and DSGR, PRTA. So it's working fine, but I'm just trying to protect the portfolio. And even though I'm down 25% for the year, remember I was up 100% last year. So I'm still doing, the portfolio is still in fine condition to rebound. I just need my ideas to work. I mean, obviously I need forward to work. And then whatever else I've put on huge in the future. All right. Hope everybody's braving all this crap. And I'll speak to you guys when I speak to you. Take care.